Boom. We are alive, ladies and gentlemen. Thank you all for joining us. This is an evening time episode. So one of the things I want to go over today is just about market crashes, I think, in general, and the complexity of the system that we are currently living in. So we're going to go over a few ideas. The only reason I wanted to do it tonight, which is kind of out of the key standard and any type of normalcy here for me, is that the futures on S&P opened up even further down. So what it's going to give us a bit to do is just kind of talk about some sentiments. And first off, understand that again, I think, well, we'll start to go over this. We'll take a look at a few different things. We're not going to start with Bitcoin, but we're going to end up there today. So this is the NASDAQ composite. Again, I wanted to thank whoever pointed out that I was making the mistake and actually looking at the NASDAQ company index the other day. That was clearly my fault. So here's our NASDAQ trading ranges taking place. And for those of you that have been studying the Wyckoff trading ranges with us, you're going to notice that we are now producing what is likely going to appear as a rounded top, very similar to what Bitcoin did. Now, one of the reasons why it's important to pay attention to the general markets is because the Bitcoin world is not in a bubble of its own. And even more importantly, look what happens when we start to look at all the data that brings us up to where we are today. So one of the fun things about the NASDAQ is we actually have a fair amount of data inside of it too. So one of the things that we don't have with the S&P 500, at least on this current charting system that I'm using, is a lot of retrospective analysis. So the NASDAQ, way back here in June of 1975, or approximately 10 years before I was born, to today, is up 30,000%, approximately speaking. That's fucking crazy. So where does that come from? So one of the things we've been doing is using a comparative understanding of the monetary stock, or the M2 money supply. And now it's not as directly noticeable here. It does start to become more noticeable as we zoom in and we start to look at more recent data instead of just all the way back to 1975. Because most of the monetary supply started to increase significantly in 2008 due to quantitative easing. And here you can see a fairly kind of stable correlation to the M2 supply and the prices of assets. And here, with almost just the 2008 data showing itself, it becomes even more apparent. So right around here, this is where you have only 2000 from 2000 to today. So the M2 money supply and the NASDAQ has basically risen in unison together. So one of the things that's important to understand is that, again, this is a very complex system. One of the probably the downsides to the economic world is I don't think anybody knows how it all actually works together. A lot of it is a hallucination. I think we could start with the idea of money in itself. If you go back in history, you look, money has been shells, like from the beach, cacao seeds, a whole bunch of stuff. And one of the difficult parts is it's kind of a general hallucination of what people agree to have this idea of intrinsic value, or at least relational value. You know, back in the day when we were a small community, it was more, hey, I make blankets, you make shoes, this buddy over here makes wallets, we're all going to trade with one another. And because we're a small community, let's just use tokens of gratitude, because without you, I wouldn't have a pillow, he wouldn't have shoes, and none of us would have wallets, okay? And then eventually, as time moved on, we got into a much more complicated system about what the value of each of these things was by the amount of effort, product, or branding that went into it. And now, today, we exist in an extraordinarily complex world where you have multinational countries trading basically imaginary paper dollars with one another that they can print and inflate at any particular rate that they would like. And it's not an easy game to understand. So what do I want to get at? Okay, well, today the S&P futures, well, first off, this potential rising wedge here. I like Alessio Rastani pointed this out. Again, I don't normally watch any other people's channels, at least for technical understanding. I do like Alessio's stuff. And we can see that there's this basically rising wedge on the S&P 500, and even more importantly, down on the 4-hour, we see a very similar top taking place to what we are witnessing in the NASDAQ itself. Again, you see the potential for this rounded top, and the break down the break of the trading range itself. So let's move that up here, boom, like this. So we can see that we hit the top of the trading range, we turned around, and we're about to test the top of the wedge here. Now, this is going to become extraordinarily important for a few reasons. Now, I was going to open Michael Burry's Twitter account because he had posted some really good stuff, but he's gone ahead and deleted every single tweet he's ever made again. This guy's a classic rock star. Just deletes all of his tweets, so can't even go back and share the data that he was sharing. But nonetheless, here's from 1998 into 2021, where we are today. This is the S&P 500 mini futures. Right now, we're just looking at future data, not actual day-to-day selling. And here we see the 2001 crash, then the 2008 crash, and we've been going up ever since. And we can do the same thing that we just did with the NASDAQ composite, is we can overlay the money supply, or the monetary supply from the United States, and the direct correlation of the money supply with the market itself. So this is probably one of the clearest indicators that the market isn't actually going up, it's just being inflated. And one of the difficult parts here is that nobody really knows the value of anything anymore, let alone, so lots of people know the price of something, but not the value of something. There's a lot of people out there right now that are probably chasing money day after day, and I've taken part in this nonsense every now and then, and not ever stopped to bathe in the fact that they live in an infinite, boundless universe and the miracle of life that exists right in front of them when they close their eyes and meditate is extraordinary. So there's a lot of real value that most people don't understand because the price of something has really, I guess, convoluted and clouded their judgment. It's clouded lots of people's judgments. So this leads us to a really big, interesting story. So here's the dollar index. Since the markets have been going down, the dollar index has actually been strengthening. And there's what appears to be, at least temporarily, a double bottom taking place on this trading range. So here's our primary selling climax, our first automatic rally, and we're seeing a move up in the dollar here right now as well. So a big part of the difficulty here is okay, well, if we know that the NASDAQ and the S&P 500 has basically been following the growth of the money supply is an imagination or a hallucination of value because there's nothing really there except for paper and the fact that the U.S. government says at least one day in the future, because of all of the U.S. debt slaves that they have managed to accumulate that have good ideas, they'll be able to pay that debt back. And it's growing at an extraordinary rate. So I wanted to go into this tonight, and it's probably going to take another 15 or 20 minutes. So thank you all for joining us this evening, and whenever you're watching it, give us a thumbs up if you like this content. Please leave your thoughts, your comments, your questions, any links to articles that you think might be important or interesting to this conversation. But I wanted to round this out by trying to really weave together a thread of these almost seemingly separate tapestries of the market conditions, where we are, where we're going, and the difficulty of asserting value and price when the market is so clearly clouded in this misunderstanding of what real value is based off human nature, the disconnect of human to nature. Anyways, there's a bunch of philosophical parts that go into that conversation. But let's kind of subject and jump into this one. Now, for those of you that don't know ZeroHedge.com, I do like to jump out on this just a obviously huge fan of Tyler Durden here. But I'm gonna read this. So last week, amid the fire and brimstone surrounding the market's shocked response to the Fed's unexpected hawkish pivot, we noted that there are two tangible, if less noted, changes. The Fed adjusted the two key administered rates, raising both the IOER and the RRP rates by 5 basis points, as correctly predicted by the Bank of America. Wow, Bank of America and JP Morgan and Dutch Bank, Wells Fargo, or Economics were wrong in predicting no rate change. Oh, okay. So in effort to push the effective fund rates higher and away from this imminent rendezvous with 0%, what does this mean? As the curvature of securities repo guru Scott Skim wrote last week, clearly the Fed intends to move overnight rates above zero and drain the RRP facility of cash. Unfortunately, the end result would be precisely the opposite of what the Fed had achieved to do. But what does this mean in overnight rates for the RRP volume? As Scarum further noted, I don't know how to say this guy's last name, apologize for that. The increase in the IOER should pull the daily fund rate 5 basis points higher and in turn put upward pressure on the repo GC. Combined with the 5 basis points increase, the RRR and the GC should move a solid 5 basis points higher. So, what's the problem here? As Scrim warned, the Fed's technical adjustment would do nothing to ease the RR volume. When the market repo rates went to zero and RRP rate was at zero, over $500 billion went into that RRP. Well, if both market repo rates and RRP rates are 5 basis points higher, there is no reason to pull cash out of the RRP. For example, if GC rates move, again, so what I wanted to highlight here is how complex the thing that is going on right now is the thread that weaves the tapestries of this financial ecosystem together and the potential for it all to come collapsing down one day in a total midst of chaos and nonsense. And I think that this is probably one of the most difficult parts to understand, is that we have been in a bull market for the NASDAQ forever, basically, since it started. Look at this again. Remember, let's go from the years I was born. 1984 to today, the NASDAQ is up 5,000%. It's an incredible amount. Well, obviously, in the crypto world, that doesn't seem like much, but everything is out of whack, right? Nothing will survive this properly when it breaks, right? And that's one of the most difficult aspects. And I wish Michael Burry had not deleted his tweets because he nicely summated it. There's a few. One of them is, we are in one of the greatest bubbles of all time, of all things. And this is what's difficult. There is no real correlation between the price of something and the value of something when they can print trillions of dollars and flush it into this very complex system of people's livelihoods and the value that they put on their daily survival. So what I wanted to do was make sure that people are aware of the downside, always, in any markets. And being in cash won't necessarily save you either. Being a productive, adaptive human who's capable of pulling off many interesting things, we call that ingenuity, I think. Responsibility is another good word for it. Creativity is another great way to look at it. Your ability to adapt over the next 20 years is going to be pinnacle. Now, again, I've stood by the thesis since 2016 that we would see a market melt up. And since 2016, I have been correct in that assertion. But as we go higher, I start to get more and more worried that it's not just the NASDAQ or the S&P 500 or the dollar that's at risk here. It is the entire financial sector, because it is basically like a broken robot with a bunch of pieces that probably aren't working that well together anymore. And to continue down this slide, listen to the complexity of this nonsense. So in retrospect, boy, this was an understatement, because just one day later, already recorded usage of the Fed's reserve repo facility spiked by a record 50%, exploding a staggering $756 billion and closed Friday at $747 billion. So, needless to say, flooding the Fed's RRP facility and sterilizing reserves is hardly what the Fed intended, and Credit Suisse's own repo and former New York Fed staffer Zoltan Pozsar wrote in his post-mortem, the repriced RRP facility will become a problem for the banking system fast. The banking system is going to be asset constrained, deposits flooding in, but nowhere to lend them but to the Fed. To being a liability constrained, deposits slipping away, and nowhere to replace them but the money market. What he means is that by where we were previously, the RRP rate of 0% did not reward the allocation of inert excess reserves by merely providing a place to park them. Now the Fed is providing a generous yield to pick them up compared to rates offered by trillions in bills. We are about to see a sea change in the overnight money market as trillions in capital reallocate away from traditional investments and into the Fed's RRP. So, what do we see? We're seeing the effects of these changes in the market right now, whether by accident or on purpose. The S&P 500 is down. Bitcoin is moving down near the bottom of its trading range. And again, what we need to remember is that we are in a very complex system right now. So first off, if you are overweight or over-risked in any asset ever, that's always a bad idea. I don't care which asset or idea it is. Being overweight in anything is never going to bode well. Yes, the markets have only ever gone up, but they've only ever printed more US dollars, and the world has continued to rely on the US dollar. This game will not last forever. Now, it's probably a broken clock sound to hear that the fact that this has happened over since 2008, Peter Schiff has been, oh my God, they're printing money. This is always going to end badly. Yes, it will, but when? When is more important than the why? We know the why. The why should be blatantly freaking obvious to anyone who's paying attention right now. This cannot go on forever. We cannot just print dollars because we lose the relationship between value and price. Right? This is breaking society. It has been breaking society for a very long time because the average person and the most wealthiest of people, well, most of the wealthiest of people probably have no relationship to what's truly valuable. Now, the indigenous communities I've lived in are actually much more closely related to the real value in life, the people that follow the stars, sleep in the grass, sing with the changing of the tides. These are probably one of the most valuable things you can find, and they don't cost you almost anything, if at all. Meditation doesn't cost you anything. There's no price associated with closing your eyes, sitting down, and breathing, yet its value is way beyond any stock. So we're definitely at a disconnect here. And the complexity of this disconnect keeps growing and growing as they continue to try to change, alter, and fundamentally tweak around with whatever hell this Frankenstein of a monetary system is. So we'll continue here because I think it's important. In other words, as Pozar puts it, the RRP facility started to sterilize reserves, with more to come. And just as Deutsche Bank explained, not that I would trust them explaining much, but we'll take them into account here, why the Fed signaling of the R-star policy was an error. To Pozar, the Fed also made a policy error as well, only this time with technical rates, by sterling reserves because it's only the thing to raise the rate of the RRP when the facility when an increase is not strictly speaking necessary. It is also another to raise it unduly high. As one of money fund manager put it, yesterday we could not even get a basis point a year. To get endless paper at 5 basis points from the most trusted counterparty is a dream come true. He's right. While OBPS may have been viewed by many as too slow, it was hardly catastrophic for now. But Credit Suisse is one of those predicting a no administrated hike at 5 basis points is generous. According to Pozar, who warns that this new reverse repo rate will upset the state of singularity, and like heat-seeking missiles, money market investors move hundreds of billions, making sharp 90% turns, hunting for even a basis point of yield at the zero bound. At 5 basis points, money funds have an incentive to trade out of all of their treasury bills and park cash at the RRP facility. Indeed, as shown below, the basis yields less than 5 basis points out of 6 months, and money funds have over 2 trillion of bills now. They have got an incentive to sell, while others have the incentive to buy, and institutions who deposit have been tolerated by our banks now earning zero interest have the incentive to harvest the 0 to 5 basis points on the range of the curve that the bill that they're offering. So put your cash in at a basis point and bills better than deposits, so the sterilization of reserves begin. And now the overnight RRP facility turns from a largely passive tool that provided an interest rate floor to the deposits that large banks have been pushing away into an active tool that sucks the deposits away from the banks that they decided to retain. So we'll finalize this here. To help readers, and thank you for Zero Hedge for writing this. I think this is a nice piece. Again, it also... I also think it highlights the extraordinarily high complexity of this ecosystem as well. So we'll continue here. To help readers visualize what is going on, the Credit Suisse strategist suggests the following extreme thought experiment. Most of the COVID-19 deposits currently with banks go into the bill market where rates are better. Money funds then sell those bills to institutional investors that currently keep the cash at banks, and money funds swap bills for overnight RRPs. This is said somewhat simply, again, simply. Well, previously the Fed provided banks with a convenient place to park reserves. It now will actively drain reserves to the point where we may end up with another 2019 repo-style crisis, as most financial institutions suddenly find themselves with too few intraday trade reserves, forcing them to use Fed's funds or other funding facilities such as FX swap lines to remain constantly solvent. This process is not overnight, and it will take a few weeks to observe the fallout from the Fed's sterilization. And here is where the problem is similar to the repo crisis of 2019. We will find that while cash-rich banks can handle the outflows, some bond-heavy banks cannot. And as a result, Zoltan predicts the next thing we'll notice is that some banks, those who cannot handle those outflows, will begin to borrow advances from FHLBs, and cash-rich banks stop lending to the FX swap, and markets to the RRP facility pull reserves away from the Fed and have to re-swap the FX lines in order to offset. Bottom line, whereas previously we saw LIBOR OIS collapse, this key funding spread will have to widen from here unless the Fed lowers the overnight RRP again back to where it was before. Zoltan summarized, it's either quantities or prices, and indeed 2019 the Fed chose prices over quantities, which backfired and then led to the repo crisis and ended the Fed's hiking rate and started not QE. Well, not QE, which they're still printing money at an enormous rate. They're just not calling it quantitative easing anymore. So, well, the Fed redeemed itself in February when it expanded the usage of the RRP without making it liability constrained as those closed quantities over prices, which worked well. Last Wednesday, the Fed turned unlimited quantities into more free money, or money for free, and started to sterilize the reserves. Bottom line, we are witnessing the dealer of the last resort learning the art of dealing, making unforced errors, and if the Fed sterilized the overpriced RRP facility, it has to be ready to add liquidity to the swap lines. Okay, so that's a lot of complexity in this ecosystem. And again, the nature of this beast right now is back on these higher time frames. We are seeing, again, the orange line here is the monetary supply being increased. Here you can see we were basically at, I think it was 10 trillion or something that they had basically printed into debt, and then all of a sudden we rose up. What is this? Between March of 2020, when the pandemic started, to where we are today. Come on here. We have they've increased the monetary supply over 25% in less than a year. That means effectively they've been able to steal by direct inflation 25% of any of your earnings. This is why people like Michael Saylor are such big fans and proponents of Bitcoin. This is extraordinarily important to understand because the dollar is not worth anything. And when we saw the hyperinflation and crisis in places like Weimar Republic in Venezuela, all assets go to shit because there is that large disconnect between the value of something and the price of something. And they are not directly easy to figure out. There's not like, oh yeah, here's the value of water. Well, guess what? If you need air and it's been free your whole life, you don't recognize how fucking valuable it is, right? You're like, oh yeah, I would love to have a Lamborghini, but you've missed out on how fucking valuable just breathing freely is. That's a big deal. And this is where I think, maybe not today, maybe not tomorrow, maybe not even the next 5 years, this market will break. And when we have to refine the value of something instead of just the price, it could unleash a form of chaos that we are probably not all that well prepared to deal with right now. So I wanted to do something important here. One of them being go over the fact that this ecosystem is so drastically disconnected that we're getting into a point of no return where when this crashes, it's not going to be fun. Do I think it's going to crash tomorrow night? No. Could we see a massive retest of our lows back let's say here from February? We could go back October. What happens if we go back even further? Look how high up we are in the NASDAQ composite. This has been only up since 2008. The NASDAQ composite is up almost 10x, right? Does it just keep going up? Do they just keep printing? Is there only up for assets? Since 2016, I've thought this was the case. We would see a market melt up. Everyone kept calling for a market crash in 2016. I was one of the few people, although I didn't have a YouTube channel yet, but at least in my small group of friends and investors, I kept being like, no, the markets are just going to go up. They're only going to print. It's the only option that they have. And this is still the only option that remains on the table for them. So what I want to say is important here is that, at least from an understanding perspective, people need to see that this complex system is being driven by a monetary addiction which is insatiable. You cannot fulfill the end of this story by simply printing money. And when we see these moments like this where we start a trading range and we start to peak out a little bit, the Fed starts to do some crazy shit like tinker in an engine that they don't necessarily understand. They mean to do one thing and something else happens. We have to at least not sound the alarm, but go, hey, look, guys, there's an alarm here for a reason. We've been people long before me. You got Doug Casey, Mike Maloney. Even though I don't like Peter Schiff, he's actually a pretty sound economist about understanding the disastrous natures of being addicted to free fucking capital. I don't know what the end of this story looks like. I've thought for a long time that, and I still believe Bitcoin is one of the answers, that this technology is one of the answers to it. But even Bitcoin will not bode well in the event of a downturn of everything. When everything gets reevaluated, that's a different story. Well, maybe Bitcoin will remain a relative value to houses or to gold or to other things, but when the dollar starts to collapse, and everything starts to collapse, that's a pretty big deal. And that is the crash we're all worried about. No one's really worried about like a 30% dip in the stock market. Like, oh yeah, we dropped back here. No one's worried about that. I'm not worried about that. I'm worried about what happens when we go back and we see a real market crash. Look at the NASDAQ from 2008 to today. This is a directly parabolic move. The NASDAQ has only gone up. Look at this. Since 2008, again today, basically a 10x for the NASDAQ. That is incredible. That is absolutely incredible to understand in terms of growth in a somewhat traditional sector. And look what happened in 2001. Look at the NASDAQ here. 80% drop. What happens if we see an 80% drop in the NASDAQ? Bitcoin won't bode well. Nothing will. Maybe that for a minute it looks like the dollar's strong, but I don't think that that's the end of the day for that. That's not the end of the story for the dollar too. It will collapse eventually. All currencies, all fiat government mandated currencies have collapsed eventually. Now, again, I do not know what day or when that will happen. My original sentiments were since 2016, we'll see a market melt up. We could actually continue to do nothing but go straight up from here to, let's just put a mark on it, $34,000 on, or 34,000 on the NASDAQ. We could just continue up like this, right? And they might do that. I just wanted to make sure that people understood these two very clear things in my mindset. The number one of the reasons why I've been an investor in Bitcoin for so long is not because I think that the economic system that we exist in is fucking healthy or working. Let's just be clear about that. So, thank you all for joining us this evening. I want to go over this because I looked here. I want to show you something. Let's see here of how I can do this. Okay, so I'm in the city right now, and I don't spend much time in the city. You see all those blinking lights out there? Yeah, all that. And you know, it's so easy to forget or that there's like a world outside that are building in different currencies and different languages and in from rice farmers to billionaire tech entrepreneurs, right? It's hard to clearly grasp that kind of function of the economic system and how it provides for everyone through so many demographics. So I think that through this video, what I was trying to do is at least reiterate to myself the dangerous potential of the markets up this high. Now, again, I don't believe that the markets, since 2016, I've been set on a market melt up, and we've been right to date. There will be a time when that ends, and I don't know when it is, and maybe it's not right now. But looking at looking at the Nasdaq, looking at what when the Fed tries to do something, and they very clearly show that they don't even know how their own economic system would react, you start to get a little worried because that means that they could collapse it by accident. So I'll take maybe a few minutes to go over some of your guys' thoughts and questions. Right now, again. I wanted to give a shout out to Glasswalker here too. So Glasswalker today shared this chart. So this is a reaccumulation chart. Now again, there's a lot of people that don't understand that yes, accumulation charts on the daily or even better on the weekly are the strongest. But the scale invariant nature of the universe means things that happen on a big time frame also happen on small time frames. And if you don't understand that, well, you definitely should be going back to some form of education because you suck. And it's not your fault. You can fix it. You just should do more reading. The universe expands and contracts in ways that are way beyond our ability to comprehend. Yet, one of the most interesting things, and one of my favorite things, is this form of scale invariance. It's the idea that if I were to remove all of the dates and times from a market, you would never necessarily be able to tell where it is that we are in the market. So even though accumulation patterns like the one that we had been charting on Bitcoin in August up until, pretty much from March, April, May, June, July, August, the breakout of the box, that was an 1,200 day accumulation channel. That's beautiful. That's a very, very strong bull market signal. When we're charting on the 4 hour, yes, they're less reliable, but they're still the same signal. Just the same way, when you look really closely at what water does to sand as it carves through the nature of that sand, you can see the same thing in the way it carves down the mountains, but at a massively larger scale. That's how the universe functions. And again, for those of you that like reading, I suggest looking at the books Misbehavior of Markets. This is a fantastic book by Benoit Mandelbrot. If the fractal view of a financial ecosystem, a fractal view of financial turbulence. This is a great book. And again, really understanding what scale invariant means, I think, is such a valuable toolkit into learning how markets work. Here is a great, it's called the Weiner process. It shows that kind of regardless of the frame of the if you don't know the time, yeah, here we go. Will it full screen for me? Yeah, there it is. So this is what the fractal or scale invariant nature of the markets look like. Whether you're on a 1 minute to the daily, you can use the Wyckoff trading range on any time frame. It becomes less reliable on smaller time frames, yes. So what we're doing here is we're actually looking for confirmations or denials. So if Bitcoin's price cannot close above basically the $32,000 mark and continues downwards, yes, we will go a lot lower. If it swipes here, jumps back up, we will continue higher. This is a flip of a coin moment here. And again, when the Federal Reserve is doing dumb shit that they don't even seem to know how their own markets and ecosystem will respond, we start to remember, okay, the universe is scale invariant. We've been up, we've been going up. We are extraordinarily high in things like the S&P 500, only up, the Nasdaq only up, And that should cause at least for a little bit of concern and worry and go, you know what, guys, even if this doesn't happen today, even if it doesn't happen tomorrow, we need to be aware of that this is not a healthy financial ecosystem. And this is one of the reasons why we like Bitcoin, or at least I like Bitcoin, why I like the potential of future money systems like Ethereum, smart contracts. It takes the power out of the governments who do not know how to use them, and we can start to rely on code and a little bit of a more open sourced infrastructure to how we play these games. Okay, so I will take a look at a few more of you guys' thoughts and questions. Give us a thumbs up if you like this content. I went on a little bit of a rant tonight, but I really wanted to share that. Let's take a look. Preston Lehner says, listen, I hunt, I fish, and I have a garden, but we still need currency. Right, we still need currency, but what and how that currency works is really the question that I think you've left totally on the table there. If you just say, hey, we need this, but there's no definition or specifics, you're not really doing anything useful. The currency could be any number of things. Currency could be the Dogecoin for all I fucking care. It'd be better than the US dollar. How are you going to prep in the city? You can't grow your own food. I have a 2-acre farm, like a 2.5-hour drive from here with a private waterfall. And we're going to be building, I think, an infinity pool, a sauna, and an ice water bath now, because I'm going to stay here for a little bit longer. Joseph Green says, we need action from the US crypto space, offset environmental impacts. I think the environmental impact story of Bitcoin has been way overblown. It's total fucking horseshit. Think about the banking system, the lights, the cars, the people that eat the food, that go on the TV shows, the amount of energy consumption from the traditional banking system is orders of magnitude higher than Bitcoin. Anyone who's making an environmental impact argument against Bitcoin is probably a little retarded. Sorry, Elon. Can't believe you didn't figure that one out. Like, how the fuck can you not see and think about all the people driving to and from and doing all this commuting? That alone is more than Bitcoin. Like, it's just horse shit. Just very horribly uneducated sometimes. Right? Anyways, we'll keep it at that one. I'm not going to bash Musk. I think he's a smart guy, but he's definitely not like super smart. He's just got lucky, basically. And I think most people should recognize that. And if they don't, they will. Time plays those stories very well. I mean, everyone should recognize their luck. Again, we're basically lucky to be here at all. The genetic lottery to be alive still. So there's that. Let's see, take a look at a few more of you guys' thoughts and questions. Jack G says, Arcane Bear, what do you think about the BTC transaction speed being around 4.5 per second? Again, you got Jack, you're looking at the conversation, I think, incorrectly. For instance, I'm a business, I'm a corporation. Let's say I want to send $100,000 to my friends in Israel or something, right? That's not a fast process. And that's currently what we're using for worldwide adoption of currency moving around, right? So you have to scale out a little bit. You're not thinking about just people buying coconuts. We're thinking about global deficit transactions, right? It's a much better place for Bitcoin, in my opinion. Arcane Bear, is your light switched off? I'm not at home right now. I'm at a hotel in the city, a few hours away from my home. Josh Mitchell says, if the Dow falls 50%, do you think crypto market will reflect the same sentiment? Yes. When markets crash, everything collapses because people's confidence collapses and prices are hallucinations of value. They're not real value. Real value is in the air you breathe, in the water you drink, and you do not get charged for the air you breathe. And if you did, you would realize how fucking valuable it is. So yes, if Look, first off, Bitcoin is nowhere near as valuable as air. Let's put it, let's be plain. But because there's no price associated to it, only when you can't breathe will you recognize how valuable air is. Now you're like, oh, well, air only costs this much per canister. It's like, no, no, no. You've missed the point here. If we start to run out of air, anyways, the point of this is there's a disconnect between price and value. And if the markets collapse, that disconnect will become more and more apparent because the basic needs of human survival outweigh those of the few at the top. We've seen this in other revolutions before. So the price would likely drop on almost everything. What's the gameplay if we go into the bear market? Keep accumulating. That's always a good game plan. We did that in our other video, I think. Christian Abbey says, if the stock market crashes, why invest in Bitcoin or anything else if the market will take down everything? At that moment, though, the US dollar may become basically worthless too. Here's the thing, right? If the market crashes, the money comes out of the ecosystem of the market, and then where does it go? Cash? That would be a very short-lived hallucination because that cash would also be on its way to being worth probably nothing in very short order as well, because where would it go? Are people just going to turn around and buy everything back again, which is often what happens. The people that have a large amount of cash sitting around usually turn around and try to buy as many cheap assets as they can. But what happens when the cash is deemed as worthless because they've just printed and inflated the monetary supply at such an extraordinary rate? It's very hard to say. How low can BTC go if the market crashes? These are unimportant questions to me. For instance, I try to focus on a lot, like more of a consistent strategy than like a price point strategy. If you're interested in understanding why, you can go back and watch my videos, The Best Investors Are Dead, and How to Time the Market Perfectly, which is not to time it perfectly at all. It's just to keep investing. Stocks crash, crypto will crash, yes, and the dollar might crash as well. Will you take an Elon Musk brain implant? Interesting. I don't think he'll be the one that's in charge of that, but he is currently. Not enough cash as everyone would withdraw. Yeah, it would be basically like the fire exit of a door, too thin, too small, not enough room. Everyone would rush to the exit. The game would be over pretty fast, I think. We are still in the cash world, and there will be a run to cash. Yeah, that will create massive inflation, almost instantaneously. Yeah, one of the things here is that just the interest of people's intent really changes there. Anyways, we'll leave it at that. Oh yeah, here, look at this. Bitcoin coming down to test the bottom of the channel. I mean, we're already seeing the effects. Yeah, intermediately, the appearance of the dollar value will go up, but that will be very short-lived. I mean, we're already witnessing that now. Technically, on the daily right now, the US dollar has been going up since the market started to turn around, right? The value of the dollar will appear to increase. We may even see a run to about 100 here. This would not bode well for Bitcoin either. So we're seeing a few things that doesn't look good for the ecosystem, just in general. Yeah, look at Bitcoin right now coming down to test the bottom of our trading range with very little supply to do that. So we're seeing a bearish signal, at least on the 4 hour right now, these smaller time frames. We've come down with very little effort here, testing the bottom of the trading range. Again, if we start to close below the trading range in any significant way, not only is it likely that Bitcoin's going to come down to 20, who knows, maybe even lower. If we start to see a big break in the S&P 500, in the NASDAQ, and you start to see some serious chaos in the rest of the ecosystem, it's going to be like hell breaking loose for this market crash. Now, again, I think they're probably going to fix this Fed this Fed rate overnight repo market stuff that we went over, just because they don't have a choice. They pretty much only have printing and lending rates. That's about all they have at their disposal now. So I don't know. It doesn't look good. Monetary supply, growth of the stock market. Where's the value of either of these things? They're basically correlated. Yeah. So again, I just wanted to be clear here, everyone. We are very high up. Like since 2008, seeing a 10x on the NASDAQ is crazy. That's ridiculous. Could it go up higher? Yes, absolutely. But we just should be worried when the Fed does stuff that clearly shows that they don't know how their own economic system is going to react. And just like in 2008, they didn't see the crisis coming. They were actually partially there the reason that it happened. So I would just just be careful. That's the way it goes. I'm gonna ban this twice baked guy. He says nothing useful. Bye. By the way, in case anyone's wondering, if you just spam the chat with stupid stuff like Mr. Twice Baked here, you just lose your ability to comment. That's fine. Very, very easy. Anyways, thank you guys all for joining us tonight. Steal with the Arcane Bear. That was a lot of fun. Tonight. I had a great time with you guys. Thank you all for joining us. I know it was a little later than normal. I will be back live tomorrow, Monday. I see that one of you guys asked on BitBoy on Tuesday. I'm joining the Around the Blockchain one as well. Stoked for that. And just keep your mind open. Be excited for the fact that you get to breathe such a precious life into your body. This is a very, very special that you get to be here. Don't waste that. Be grateful for that. It's worth more than money. And it's worth more than currency. It's definitely worth more than the US dollar. Tell your happy Father's Day to all the Bear family out there who may be fathers or about to be fathers. I know that. Thank you guys for supporting us. What else here? That's it. I love you, Bear family. Have a great night. Thanks for enjoying the rants, and we'll see you again on the next episode.